A newfound shift in thinking has taken hold in the market, particularly in the technology sector. The mood on the stock market in the US has suddenly transformed overnight from unwavering confidence to a maelstrom of terror. This attitude has spread across the EV sector. Since January 4, the stock prices of Ford, General Motors, Tesla, and Rivian have all fallen by more than 20%. Investors with steely nerves and a long-term time horizon may want to consider purchasing the stock dips. Another casualty of the market decline was Lucid Group, which had a spectacular bull run halted by market circumstances. Strange things are occurring in the market, though. In addition, Lucid has been very secretive regarding specific statistics. But why is this the case? What is causing the stock to behave strangely? And what information do you need to be aware of as an investor? Keep watching till the end to find out the answers to these questions. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder, subscribing is free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. As the worldwide use of electric vehicles grows, investors continue to show a strong interest in the names of electric car companies. Many EV brand names, on the other hand, have taken a battering lately. Even though Lucid Motors was introduced to the NASDAQ 100 index, the company's stock has dropped by a significant amount in the month of January. For the record, it is not just the LCID-Stock that was down. With the Federal Reserve's intentions to raise interest rates in the next months, the stock market as a whole is witnessing a downturn. Rivian Automotive and NIO, two other electric car companies, have also had their stock prices drop. A large part of this has to do with Tesla's most recent financial report. It was a mixed bag, and it didn't do much to assist EV stocks, which were already in question because of their lofty valuations. So, how are LCID stock investors feeling about the company? The company's stock is a potential long-term electric vehicle investment that started to go into mass production. Shares of Lucid Motors are now trading at a discount to their 52-week high and far from a suitable input. As a result, the stock is behaving oddly. It's important to keep in mind that the corporation has yet to make a profit, but the firm is maintaining a high level of secrecy, most likely because they like the thrill of a good surprise. Last year, they basically kept stating that they would start delivering in the second half of 2021 until the first delivery was virtually ready by the end of October. Likewise, until now, they haven't said anything regarding manufacturing and delivery statistics for the year 2021. The market is too cautious and believes they may have made a costly mistake. When Tesla expressed dissatisfaction with the component supply chain, this way of thinking was even more encouraged. The reason why LCID has been so volatile over the last week is because of this. Now things have become even more interesting. It's possible that they achieved their objectives in 2021 and are preparing to surprise us with a surprise with the fourth quarter report. CEO Peter Rawlinson, based on what he's seen so far, is probably to have issued a warning if they were to fall short of the 520 car target in 2021 to make sure that the market does not show volatility. There are moments when their secrecy becomes a hassle. Until September of last year, the trolls maintained that they would not produce a single vehicle in 2021. Lucid Motors were deafeningly quiet until it was their time to shine. The stock price remained in the low 20s and often even below 20 for the most of that period. It was an excellent opportunity to build up a small portfolio of equities and option derivatives, much like now. However, there has been an unusual pattern of activity in the pre-market, with Lucid shares trading at a premium to the current market price. After being valued at $30 per share in the pre-market, LCID fell to $27 per share as soon as the market opened for trade. Could there be insider trading or an institutional sell-off? Company insiders are notorious for selling like crazy, especially when the company's value is too high. Lucid was an exception to this rule. 2 months ago, the lone insider selling was Peter Rawlinson. There's nothing else. Peter sold to cover the taxes on his vested shares, meaning the sale of stock was to satisfy the company's tax liabilities connected to options that have already become exercisable. This has always been a part of the corporate world since its inception. Other than the insiders in the case of Lucid, it does not matter how lucrative the company's stock compensation plan is. They are just not selling. Maybe they believe that the business is currently undervalued. Institutional investors have also maintained their stakes in the company, with PIF owning the largest stake. Even with the recent lockup expiration, the Saudi hedge fund has remained steadfast in its position. So, what is the most likely scenario? Is there a correction in the market since Lucid has performed better than the majority of companies in the automobile industry? The company has a long-term technical rank of 68 in the industry. In other words, trading during the previous 200 trading days has positioned the firm in the top half of the market, with only 32% of the market scoring higher than the company. LCID, which is ranked 120th overall by this statistic, outperforms 79% of the stocks in the auto manufacturer sector. LCID has emerged as the most advantageous of the alternatives. When it comes to business investors with plenty of money to spend, they have taken a decidedly bullish position. There have been a lot of unusual transactions in the options history of Lucid, but the most of them have been in favor of the company, which is a good thing for investors. February is seeing some bullish calls for the stock. Lucid has had a bumpy start to 2022, but the company's gains on the first day of February have soothed shareholders. As the Californian startup prepares to release its next quarterly earnings report, Wall Street will be searching for signs of optimism from the company. Analyst forecasts for the business have recently changed, and investors should take notice of any adjustments. Generally speaking, these most recent modifications tend to represent the constantly shifting nature of short-term business trends. A favorable forecast adjustment is thus an indication that the company's business prospects are looking promising. Lucid has not announced any company-specific news that might help determine the cause of this decline. Furthermore, the pattern in 2022 thus far has been a shift away from long-term names and toward firms that are already experiencing significant quantities of working capital. Likewise, Lucid certainly falls under the category of names that are intended to pop up in the long run. So, in a market dominated by equities where investors are looking for survivors among the carnage, purchasing LCID seems to be a more prudent approach to boost their portfolios. But I'm curious to hear your thoughts on LCID discounted price. Do you believe it's a good purchase right now? Aside from this, do you believe Peter Rawlinson keeping the delivery number a secret will lead to a rise in the stock price once it becomes public? Let us know what you think by leaving a comment down below. Swetchy Things has said it makes no difference whether they've delivered 520 EVs. All startups are slow in the beginning, but if they can demonstrate development and indicate that they are gradually increasing their output, he believes that it's worth investing in the business. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.